You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
Good morning, everyone, afternoon or evening, depending on when you're watching this video. And hello to everyone catching the call live as well for the LCMS Trading Club members. I hope everyone's been going well so far this week. There's been a lot of up and downs in the markets and obviously just a lot to consider with the global tensions that are going on, but I hope everyone is going well with their trading. And also we will have quite a lot to go through as well today. We've got the yen pairs and gold in focus with Jen. I'll be going through the US dollar index. I'll also be touching upon what is interesting in the equity markets, especially the Australian stock market. There's still a little bit going on with gold and oil, and that is following through with some stock movements to how you can capitalize on it in that sense. So some things to discuss there. And obviously, before the trade ideas in detail that we go through, I will share the risk disclaimer as well, and I will read it out. So it's important to understand that any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. We are here to help as well if you've got any questions during the call or in the LCMS Traders Club chat, just depending on where you're looking to take it. We've got various sections, so please feel free to share any charts, and we are here and ready to help if you've got an idea and you want to get some feedback on that as well for some trades. But just to get started, Kim Hong is not in today, but I'll be taking it from the DXY now. So US dollar index, it did see a little bit more of a pullback as well with that daily candle there. So that closed earlier this morning. We are seeing a small bounce now on the hourly. So we did see that there were some strong moves in the US last night in the S&P 500 and also the NASDAQ as well. And with that, we did see some outflows of the US dollar. The lows were 97.86, and we're coming up now to 98.23, which we've seen offer some resistance before. I was talking about waiting on a pullback below 98.70, and it did pull back, and it really wasn't getting much attention from the buyers, so I left it. And I was a little surprised. I woke up this morning and we have seen it fall a little bit further, but there is a small bounce taking place now. As I said, we've got that resistance level coming up. So it's just, important to step back and just assess things and what is going on later today. And we've mentioned this before, and we do have, it's a pretty significant data set released later today. So inflation is coming out, the core CPI month on month, and we have the CPI month on month, both expected to, well, it's a little bit down on the previous read. So 0.6 was the previous month, 0.5 is expected, but with everything that is going on, especially with the price of fuel, with oil still quite elevated, even though we have seen that pullback, it's looking like there is some real pressures there to the upside, and that's going to really weigh heavily on the inflation rate. And there's still a lot of supply chain issues going on in the US too. So I would really strongly suggest that if you are into reversals, the US dollar right now, I would say, is the bounce is taking place. And I would say, let's see how the data comes out before thinking about maybe getting in on an early sell trade. I'm still long biased on the US dollar, to be honest. Now, we also will have a look here now on the Aussie market. So ASX 200, we did see it come up a little bit, and it's up 1.45% so far today. And for people that are following gold and oil, we've got the biggest gold miner in Australia is Newcrest Mining, and that's been interesting. It did have a bit of a gap up, and it's gapped down. It gapped down this morning, and we have seen a small rally now. So I'm in from 26.85, still an open position. But if we look at gold, it's been trying, but it's still, lagging somewhat to try and get through. I mean, even just maybe 1980, we've seen recent highs at 1975, but it's still got a lot of overhead resistance. And one more thing I'll just bring up is the Brent crude price here as well. And that's what that's doing. So there's been a bit of to and fro in regards to US talking about banning Russian oil, and then some pressures on OPEC. And then the UAE have come out and actually said they're happy to stick to the current production levels. So that's actually helped with the bounce there, but it's still a bit sideways. So markets are not quite clear on where they'll take it. But in regards to an oil play, and this is Woodside Petroleum, and that's what we're seeing here as well. So we've seen the gap down, and sometimes we can see these closes, but it's still lagging somewhat, and I'm not so keen on going in gold and oil. I'm just sort of keeping it a little bit more risk adverse, just because we've seen a lot of news coming out. We also saw President Zelensky mention that he was okay to step back from the NATO inclusion. So that just means that there'll be no NATO for Ukraine. And that's one of the reasons why Russia actually came into Ukraine, because they didn't like the pressure that it would cause if NATO was right on the border there of Russia, if they went and they actually helped support Ukraine. So it's looking tentatively like there might be a fourth negotiation come to the table with Russia and Ukraine. So that will just mean oil and gold could pull back some more. So I'm sort of being cautious with that. I don't want to be overexposed to that situation. But from a US dollar standpoint, waiting for that release of the inflation data later tonight at 9:30 GMT +8. But if we see price get over 98.23, we could see a bit of an anticipation run. So I probably won't enter that, but that is a possibility if it does do that, because markets might be thinking inflation is coming in a bit better than expected, or higher than expected, sorry. So those are my thoughts there, guys. Now we do have the yen and gold in focus with Jin, so I'll hand it over to you now, Jin.
Thanks for that, Scotty. So like I've been saying through the week, right, a lot of trading opportunities to be had for this week. We've seen not a lot of news for, not a lot of big news for the early part of the week, and then we saw that, markets have been moving quite nicely, a big retracement, dollar retracing back down a bit, everything moving up to the next resistance levels. But today is going to be a bit different. All right, so sharing the news again, tonight we do have the ECB refinancing rate. No surprise, they're going to stay at 0%, but pay attention to the monetary policy statement. At this point, we think that, there might be talk about projecting the future rates, or when the timeline for future rates might be. And then we got a press conference for the ECB. US CPI, we've been talking about this quite a bit already. Looking to be at a 0.8, might even be a 1%. If the US inflationary numbers does climb to the historic high levels again, or maintain at the historic high levels, then we're going to see that dollar strength come back into play. Like Scott was just sharing with you, it's been sitting at that level. It had a big retrace, sitting at that level now, possibly a good base or a good level to start bouncing back up. So, again, quick reminder is for Traders Club members tonight, we do have the session at 8 o'clock. So we'll be preparing you for the ECB news release, and then also the CPI numbers, looking at trade ideas that you could be jumping in before the news release to take advantage of the full move. But with the focus on the yen, dollar yen, euro yen, pound yen, and gold, what all this means is that we're likely to see the trend continue in terms of the yen pairs, but there might be a bit more volatility for the euro yen at this point, right? So what that means is, looking at the charts here, the US yen, right? The US yen, the last time we spoke about it, we said that if it breaks above that 115.83 level, we're anticipating it to move towards that 116.22 level, right? And it's done that. It broke above slightly, traced back in, and then now that moved very strongly towards that 116.22. What I'm looking for here again will be for that trend to continue. But you would have to wait for it a little bit. You have to wait for it to break above this 116.22 or 116.25 level. I'll show you on a daily time frame. You can see that there's a lot of space towards the upside here. If we zoomed out even further to the weekly time frame, you can see that 116 is something that hasn't been visited for a very long time. So let's just find the next resistance level. Right, so we can see that 116, if it does break above 116, we're going to see 118 as that next immediate level. So quite a bit of an upside available there, coming back to the H4 time frame. So if we do see it break above that 116, what I would say is do not look to buy and hold it all the way towards that 150 profit target. Could very well move towards that point, but I think that in this current situation, look to get out at about 117, then you could have your next trade towards 118, right? So I'll put in the line there at about 117, so about there. So once you could be looking for the US yen on H4 time frame, look for it to break above this resistance level of 116.20. Look to buy at about 11636, stop loss about a 30 pip. Take profit, your first take profit could be at about 60, so almost 1:2 risk reward ratio towards the upside, and then ultimately you could be looking at that 150 pip, a 1:4 risk reward ratio or 1:5 risk reward ratio towards the upside, towards that 118 resistance level. But bear in mind, again, with the US yen, we are reaching multi-period high levels. So we're not going to see, and I'm very unlikely we're going to see that straight line move towards the upside. I think we're going to see it bounce around quite a bit in this area, especially test that 117 level before we see that upside. So I would say break this one trade into multiple trades, take profit onto multiple trades, and then you could actually secure your profits more safely in that sense. With that said about the US yen, looking at the euro yen, a little bit of a different picture at this point. It has broken the 128 resistance level. Looks like it might push higher. Looks like it might push higher, especially if it finds that base as a support of 128. But looking at the euro dollar, we're seeing the euro dollar testing that 1.1072 resistance and possibly turning down. So if it does turn down, if it does reject this level and turn towards the downside, what's likely to happen is it would drag the euro yen back down. So euro yen, back to the euro yen again. What it means is we're going to sit in consolidation here, because as the US yen is likely to move towards the upside, we could see that try and pull the euro yen up. But as the euro dollar comes down, we could see it try and pull the euro yen back down again. So we're going to sit in consolidation. But what I'm looking for, if I zoom out, you can see that trend, that big downward trend that has started since Feb all the way down, now a retrace. I would be looking for a selling opportunity. All right, I'll be looking to sell. If it does come down and break below this 128 support level, you can keep your stop loss tight at about 30-40 pips. Your take profit could be an 80 pip, 1:2 risk reward ratio towards the downside on the euro yen here if it breaks below this support level. If it bounces back up, if it continues towards the upside, I would say the US yen will be a more attractive trade rather than the euro yen, because of how the euro dollar is likely to move we're looking at possibly the euro dollar tracing back down again. So I would prefer the US yen towards the upside. Looking at the downside, I'll prefer the euro yen. And then on the pound yen, this is actually quite interesting. I'll take that one away because that's invalid now. Pound yen reacting, approaching that 153 resistance level. And I think that if it does react strongly to this point, as strongly as in to turn down again, why I think it's going to turn down is looking at the pound dollar. You can see the last time we spoke about pound dollar, actually yesterday we spoke about the pound dollar, said that it was going to come up, test that 1.32 resistance level. It did that exactly before turning back down. Now, that was one trade that we were looking at. The next part of this trade was to look for it to break below this 1.31 level towards the downside. So we're quite negative, or we're looking for the pound dollar to move lower, predominantly because of that trend. So with that, resisting that 1.32 resistance level, back to the pound yen, what this means is I'm actually looking quite interested for the pound yen to reject this 153 resistance and to look to sell it down. Right, at this point, usually with pound yen, the stop loss is quite wide at about 50 pips. Your take profit towards the recent low point will be about almost 150. You're looking at a 1:3 risk reward ratio towards the downside, but you would have to wait for it to reject this resistance level and also for the pound dollar to track lower. Again, we went through the US yen, we went through the euro yen, and then the pound yen. How I would rank it is US yen towards the upside, quite likely, quite a good trade that we could be looking for. The euro yen, I would be a bit less. I'll rank it third. The pound yen, I would rank it second because the pound dollar has rejected that level, turning back down. I would say that we could see the pound yen follow second to the US yen. So US yen towards the upside, pound yen possibly going to consolidate there until later into the session when the pound dollar opens, or when the UK opens, we could see the pound dollar move lower. We could see that move down for the pound yen. So ranking those three, now looking at gold. Gold has been super exciting. When we're talking about gold, we're saying that it was going to track towards the upside. It went as high as 2070 before that big retrace back down. What I'll actually do here is I'll move this line. It doubles up as a bit of a trend line there, right? If gold does, we've seen that retrace back down because of that 2070 to 2050 level, hitting a psychological number, 2050 there, that big retrace. I think that if that line holds, we could see it bounce back up, right? We could see it bounce back up from this 1976 level, or as low as 1970 level. We could see it bounce back up. What I would say is, again, looking for that move back up towards that 2050 level again. But bear in mind, this line does not have to be one fixed line. You can look at it as an area. So it might break down a little bit further before bouncing back up. I would say the safest way to look at gold would be to say that if it breaks above 2000, that would be a very nice place to buy, especially because of what happened over here. We saw that consolidation only when it broke above that 2000 level, then we saw that big upward move. So I would say stay out for now, be a bit more patient, wait for it to bounce back up, wait for it to go above 2000 before looking for that big buying opportunity on gold. With that, again, a quick reminder, session tonight with the ECB and the US CPI numbers to be released. We'll be looking at some live trade ideas there. Traders Club members, make sure you join the session, 8 p.m. GMT +8. And with that, I'll pass it back to you, Scotty.
Thanks for that, Jen. And again, we will be uploading this ASAP to the Trading Club chat as well within the EchoFin platform. So please check it out if you did miss a little bit of the call. And thank you again for everyone watching. And I hope you have a nice rest of your day. See you tomorrow, everyone. Bye for now.